KOSDAQ closed at 6,696, down more than 215 points on the day. Three market moves from Korea today. Samsung announced the largest shareholder return in Korean market history, and the stock fell more than 8% the following session. 5.2 trillion won in retirement pension assets shifted from banks to securities firms in the first half of 2026 alone. And KOSDAQ's biggest active ETFs just dumped Biotech and reloaded on semiconductor materials, components, and equipment. It's Tuesday, August 25th. Here's what investors are watching in Korea today. Samsung's buyback announcement collided with a structural legal barrier, turning a record shareholder return into a sell signal. Retirement pension assets are accelerating a structural migration toward higher return mandates, with a single securities firm capturing the majority of the flow. And KOSDAQ's active ETF rotation reflects growing institutional conviction in the semiconductor materials cycle, the most significant sectoral reallocation on the exchange this quarter. Here's what the numbers show. Samsung Electronics shares fell more than 8% on August 25th, one session after announcing a plan to cancel 10% of its outstanding shares, the largest Treasury share cancellation in Korean market history. Korea's Financial Industry Capital Act blocks Samsung's financial subsidiaries, Samsung Fire and Marine Insurance at 8.51% and Samsung Life Insurance at 1.49%, from participating in any share cancellation, leaving the full 10% stake structurally excluded from the buyback execution. Korea's retirement pension system recorded a net transfer of 5.2 trillion won, approximately $3.8 billion, from bank custodians to securities firms in the first half of 2026, with more than 3.5 trillion won flowing to KB Securities alone. KOSDAQ active ETFs reduced biotech allocations and concentrated capital into semiconductor materials, components, and equipment stocks, marking the most significant KOSDAQ sector rotation of the current quarter. The KOSDAQ active ETF led the reallocation, with the sector now representing its single largest position by weight. The government signaled a review of micro-adjustments to its penny stock share consolidation policy, adding a small cap variable to an already active week for regulatory calendars. So what does this mean for investors watching the Korean market? Earlier, we said Samsung posted Korea's largest ever buyback and still fell 8%. Here's what that actually means for you. The Financial Industry Capital Act is now the single biggest structural barrier between Samsung's shareholder return ambition and its execution. The market is pricing that regulatory constraint, not the business. Retirement pension outflows towards securities firms signal rising institutional demand for equity-linked products, a slow-moving tide that structurally favors active managers and pressures bank fee income over the medium term. Both stories point to the same underlying tension. Korea's capital markets are deepening faster than the regulatory framework can adapt. Watch whether Samsung formally requests a Financial Industry Capital Act amendment in Q4 2026. A legislative move would be the signal that the buyback execution path is clearing. Watch monthly net retirement pension outflows from banks through year-end, as the pace will confirm whether this is a structural shift or a tactical reallocation. And watch KOSDAQ ETF net inflows as a proxy for institutional conviction in the semiconductor materials upcycle. That's today's AI PRISM, Securities Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.